going? Yes. So we are recording the session, and as I indicated today, we'll be talking about the Kenya's current economic outlook and the opportunities for MSMEs. And the MSMEs here, we're talking about business people. And today we're having an exciting, a very informed speaker who is our economist. Julius Randu is with us. He's in the room. And I know he'll be telling us a lot when it comes to the opportunities for business people, what is happening in the economy. I don't know what comments you have from your end, but as we do that, we are also keen to find out the first half of the year just ended on 30th of June. What are some of the strategies that you implemented in your business in the half year of 2024? We'll be using the chat box just to communicate to us. We want to also learn from each other. How was your first half of 2024? Is there anything that you implemented? How did it go? You can go to the chat and just comment and just tell us what possibly you're doing in your business so that we can also learn from you before we have our speaker for the day. So maybe you can just go to the chat. I will be reviewing the comments. How has been your first year of 2024 look like? What were the strategies that you possibly implemented? I'm sure a number of us were saying the economy is not good. So possibly an issue around our cash flows, managing our costs. Is there anything that you have done so far just to update yourself with the current times, just to respond to the challenges that we have or the opportunities that are here? What is that one thing that you did in here first part of the year, which is the half of 2024? I'm keen to find out. I'm keen to learn. Just go to the chat box and respond. I'm pausing for a minute or so. Yes, go ahead and just say what is that one thing that you're doing. We are keen to learn also from each other. Yes, and I think I see the first comment here from Sairo Consultants. He's saying, good morning. In the first half of 2024, I bought my first treasury bill and was happy with myself for not letting the money lie idle in my account. The interest was paid upfront. Oh, thank you, Sairo. Good. Thank you for that comment. Yes, we are interested to find out what is happening in your businesses. We are saying the economy has challenges. What are things that you're doing? What is the strategies that you're implementing in your business? We are keen to see what is happening. And I'm sure we have also been having these sessions. We've been learning. Is there anything that you also picked? Yes. Oh, good. I see some good comments here. Richard Bonyo is saying, as a farmer, this year was my worst of all. Why? Haha. The fertilizer thing, apologies for that, and performance for the soybeans and normal beans farm. Then came the floods and watered, the floods that watered down and 8 acres of maize. This is not good. Hope the Gen Z and the Lula get to choose. We continue doing business. So thank you for that comment. Dr. Irongo here is saying the going has been tough due to high cost. Dollar and fuel price movement has unfavored us. Things are now shaping up. Hope the Gen Z and the Lula get to truce with continue doing business. I think this was the comment from Dr. Irongo. Yeah, so I think, Richard, your comment, we also got to see that you had a bit of challenges in your farming. We hope that things will get better. Yes, I'm keen to find out what was happening in your businesses in the first half of the year. Is there anything that you did? Is there anything that you implemented in your business? Yes, we can continue to chat. Yes, Augustine, you're saying, just a minute. I have been in financial crisis. I haven't done anything so far. We hope that it will be better, and I'm sure the economist is listening to some of these comments so that even as we progress, he'll be telling us where are some of the opportunities that we need to look out for in 2024 and the next part of the year. So you're saying there is someone is saying, Clayton Omwanga is saying high interest rates are making loan payments more expensive and difficult to keep up with. Yes, we will also be touching on the issue of the interest rates and what possibly we need to do so that we are able to keep running our businesses. Yes, I want to continue reading more comments. This is James Kimathi. He's saying, in April, I started a guest house business in Nanyuki. It was slightly affected by the riots from the second week of June. Good. That's what happened. It's called Themes Guest House in Nanyuki. Thank you, James, for that comment. We wish you well in your new business, and we hope that you get business. I'm sure the tourism industry is not doing badly right now, and especially that area of Nanyuki. We hope and we wish you all the very best. So yes, we can keep on chatting. I'm keen to find out what is happening in your businesses. We want to address some of the challenges that you have during this conversation. And as I said, we have an exciting and very well-informed speaker who will be telling us what is happening in our economy, what are the opportunities, where do we need to plug in, and what do we need to expect in the other part of the year. So Dorothy, you're saying I'm in bookkeeping for MSMEs. I bought a new bookkeeping software to facilitate my work, looking for customers. Okay. Dorothy, we note your comment and we wish you well again in your business. And we also hope that our customers here are keen to keep updated when it comes to the record keeping, some of the platforms that we can use to do so. So that is quite good, and I wish you all well. I see your comments here. Joyce Gatua, I have been wanting to add a COP agent, but some changes in the business registration certificate has delayed the process. Yes, we wish you well. Joyce, again on the same, if you require our support on this, we can also come in and support you. When it comes to the quick turnaround time for accessing your COP Kwajirani agents. It's one of the our digital solutions that we have as a bank. We hope that it will be sorted soonest possible. So we can keep chatting. Clayton, I see your comment again here. One customer never paid in full, and I have been chasing him since January. Okay. We wish you well as you look out for debts, and I will also be sharing something around how do we need to manage our debts. Yeah, because it is speaking to our cash flows. It is speaking to the engine that drives our business, which is the cash, and we say cash is the king. Lydia, you're saying being in service industry, it was difficult. Had to close the office due to the piling of rental arrears. Sorry for that, Lydia. We hope that you are getting a new strategy and you have a strategy that is going to help you to continue doing business, even in this era of trying to reduce on your cost. So good. I think those are some of the things that you did, and we wish you well as you continue to do your business. And we hope that we will also learn today something that will be part of the things that we need to do to improve and to continue learning in business. So our agenda today, as I said, is just a quick welcome note, and then we'll have a presentation. We have an economist today telling us much about the economy. We'll have some question and answer session. We'll wrap up the session and we'll do a call to action. So someone then will be asking, why are we here? And I'm very sure we could have one or two people or few people who have joined the session for the first time. If you're joining this session, the non-financial services program, where we have the webinars, today for the first time, please go ahead and type 1 on the chat. We want to acknowledge your presence today. Just type 1 if you're joining the session for the very first time. You can see we have big numbers already in the session. Are you joining for the first time? Please type 1 on the chat. We want to acknowledge your presence. This is how we do it here, just to great numbers here coming. Ezekiel Keboy, welcome. Lydia Minor, welcome. David Karemi, welcome. Team, let's keep on appreciating this team. Maurice Mwendwa, welcome. Good to see you. Charles Ogutu, karibu sana in this session. Fresha, welcome. Big numbers here joining for the first time. So team, let's go to our emojis and do the claps. Let's appreciate those who joined for the first time. Evans Waidaka, I also see you. Karibu. I see you. Cornelius, appreciating the team. This is the community that we have and we have developed in this online platform. Keep learning, to keep networking, and to keep growing our business to the next level. So what we say, our MSME webinars are part of the bank non-financial service program, where we do several things, including the webinars that we do every Thursday. We also do the MSME networking forums. This supports SMEs in different regions to network and learn. We go around the country just to make sure that we have some deliberations with you, business people, and we learn. We also get feedback from you, and we also share what we feel help your business to move from one level to the other. The other thing we do is we conduct business clinics in our branches that are organized by our staff in the branches. Again, we have some organized forums with different business management topics. The other thing we do, as you notice, we are recording this session. We have an MSME online portal where we deposit every recording, every material, every information that would be useful to you to refer, to learn about our products, and to learn about what we do when it comes to learning, including the recordings for the webinars. The other thing, and very exciting thing that we also do as a bank, is we organize yearly international business trips. And these are forums that we organize to different emerging markets to learn and to meet suppliers, for instance, in China, Turkey, Dubai, Thailand, Israel, Vietnam, and Malaysia. This year, I have exciting news because we will be organizing a trip in the month of September to China and Dubai for our business people. And so we will be sharing more details in the other forums. But if you are interested, in the month of September from 15th to 24th, we are organizing a trip, and I'm hoping that we'll be sharing more information as we plan on this. So just in case you're interested, feel free to get more details as we proceed. And great, so welcome. Let's have these engagements. You can use your Q&A tab. You can use the chat box to share with us what you have, including the questions that you could be having. And as I indicated today, the topic for the day is the economic outlook of Kenya currently and the opportunities for the MSMEs. And we agreed by saying that we have just ended the first part of the year. We are hoping and we believing that 2024, second part of the year, will be better, and we hope that there will be opportunities. So our speaker for the day is none other than our economist, Julius Randu is with us. I hope, Julius, you can hear me. I hope you can hear me. If you can hear me, just come on the camera. We want to appreciate you. And team, let's appreciate Julius as he comes over. Yes, let's go to the emojis again and appreciate Julius. Yes, Julius, you will not talk until the team here appreciate you, because you spared some time just to come in and share what are some of the opportunities that you have out there, and how is the economic outlook seem to be, especially for the next part of the year. Yes, all those clap, Julius, are for you. come over and
Thank you.
say
Thank
hi
you.
to the team. Julius?
Thank you. Thank you, Peter, for that. And thank you to our esteemed customers. Good morning, everyone that has been able to join the call. This is my second webinar that I'm joining, and I'm very happy to be here today to share with you what we've been able to see in the markets, and especially the recent developments that we've seen in the country. So we'll be talking about a few things that we've been able to pick from the markets. Of course, issues to do with the finance bill, the budget, and then, of course, other recent developments that we've seen in the market in terms of the key movements, whether it's on the Kenya shilling, the inflation numbers that we've seen in the market. We'll talk a bit about the opportunities that we are seeing in the market for the MSME space, whether it's opportunities within the budget, opportunities from the broader economy in 2024. We'll be looking at the numbers, how they've come out in the first half of the year, and how we see the second half of the year, 2024, and of course, beyond to 2025. I've been going through some of the comments that have been coming through from our esteemed customers. Very encouraging that you could actually spare some time to actually be with us and share these comments with us. I'll touch on some of them in terms of the developments in the market, and of course, how best we can actually be able to move forward together. So to start our conversation today, I'll start with what actually happened in the month of June.
Maybe Julius, I like the discussion already that you'll be telling us a few things around the first year, the issue around the currency. But before even you dwell there, what is your general comments on what the customers are doing? I think you have seen a number of comments from the customers. Some of them they're saying they are chasing some debts. Some of them started some projects and they are not yet sure whether they will grow. And having been in the back side and you're looking at the figures in the country and what is happening in the economy, what are your general comments to say, responding to some of the charts that the customers have just highlighted before you go to dive deeper on your presentation?
Thank you, Peter. And to answer that, I think we need to acknowledge the fact that we've seen quite a number of opportunities in the market in 2024, based on the developments that we've been able to pick from the markets. But equally, there are challenges in the market that we still continue to observe. Of course, issues to do with the cost of doing business. That has been a concern in the market. We know that we've been having challenges around the level of interest rates in the domestic market. That has been a key pain point for various segments in the economy. But be that as it may, I think what we are saying is that if you were to do a comparison in terms of where we are today, and probably a year earlier, we've seen some significant improvements. Not where we would want to be as an economy, but I think we've taken steps in the right direction, and we should be able to see the dividends of these bold steps that have been taken going forward, especially in the second half of the year, and even beyond into 2025 and 2026. So it's a mixed bag in terms of what we've been able to pick. There are challenges in the market, and at the same time, we've been able to see opportunities equally in the market. So the question then is for us to be able to answer, where are these opportunities? What challenges are we seeing in the market, and what is it that we can actually be able to do so that we can actually be able to move forward together in the coming months, and of course in the years ahead. I think that's the key challenge that we need to sort of address in this meeting, basically coming up with strategies that are going to help ourselves to be able to navigate the challenges, but at the same time to be able to tap into the opportunities that we are seeing in the market. So I think that's the general view of how we see the market currently. And I'll be speaking more on those areas going forward as we start our discussion. I hope that answers that, Peter, even as I start our conversation today.
Yes, absolutely. Absolutely.
Thank you.
Proceed.
Okay, thank you. So we'll start with the recent developments in the economy, and especially touching on the development that actually resulted into the chaos that we saw in the economy. And this is, of course, the Finance Bill 2024 and the attendant document, that is the budget in 2024-2025 financial year. But just to give a background in terms of the finance bill and, of course, the appropriation bill, which then becomes, of course, the budget. The finance bill in 2024 sought to raise around 346 billion in the current financial year by advancing a raft of tax measures to the economy that was actually supposed to raise the 346 billion. The total budget for the financial year 2024-2025 was coming in at around 3.992 trillion in the year 2024-2025. And the total revenue that was supposed to be generated by the government was around 3.34 trillion in the current financial year. And the difference of that, of course, was supposed to be raised by borrowing, both in the domestic market and in the external markets. But now the key question that we are grappling with today is now the fact that the finance bill has been rejected, and to that effect, the government has pronounced itself to the deletion of all the clauses in the finance bill. The question then is, what does this mean for us? Number one, as an economy, to the government, and of course, to the various business players within the economy. And that will form a bigger part of our discussion today. Of course, we'll have some other areas that we're going to discuss in this meeting. But first, we need to delve deeper into what this means for the government going forward, what this means for the businesses going forward, and which areas are we likely to see some reduction in terms of spending in the current financial year. And then, of course, what that will mean to the overall economy and, of course, to the various business segments in the country. But just to start this conversation, so what the government has come out to do after the rejection of the finance bill is that the government has indicated that they're going to reduce the projected spending of 3.992 trillion by 177 billion out of the 346 billion that was supposed to be raised by the finance bill. And the remaining amount of 169 billion is going to be borrowed. And our sense is that this will largely come from the domestic market, given the fact that the projected number of borrowing from the external markets is, in a sense, given the development that we've seen, it will probably be a bit challenging for us to be able to go to the markets externally to be able to raise that funding. So we see the government increasing its borrowing in the domestic market by around 169 billion from the figure that was given in the budget. And this should be able to help the government to be able to fund some of the programs that the government was having within the budget. So some of the pronouncements that have been made by the government in terms of addressing the challenges of rejecting the finance bill is, of course, there are certain areas that the government has indicated is going to cut spending. And number one, of course, is renovations across government offices. And the pronouncement that has been made here is that government is going to reduce 50% of the budget that was supposed to go towards renovations, whether it's State House, whether it's within the Deputy President office and other offices within the executive. We expect to see the budget around renovation being scaled down by around 50%. Equally, the government has pronounced itself that going forward, we are going to see reduction in the expenditure towards travels. And this covers both domestic and external travels by the government officials, meaning that the government intends to have some savings around that vote. Equally, the government has pronounced itself that it's going to reduce spending. Actually, it has suspended the purchase of new vehicles in the current financial year, except for vehicles that normally go towards the security sector. So that will not be impacted, meaning that we do have an opportunity on that front as well for players that normally play within that segment of supplying the government with vehicles, whether it's through leasing and other opportunities. We do expect that opportunity to remain in the current financial year. Equally, the government has indicated that it's still going to announce more raft of measures that it's going to undertake to address the issues that have been raised by the citizenry around the budget. And of course, the fact that some of the tax measures that are being proposed, the citizens were deeming those measures to be counterproductive, especially on certain segments of the economy. Whether you want to think about it in terms of the manufacturing sector, whether you want to think about it in terms of the transport sector, those demands, if I may call them demands, have been answered in a way. And going forward, we should be able to see, or rather we expect to see the government actually coming out clearly to communicate some of the areas that the government is actually going to focus on in terms of reducing the burden or the budget that was presented to Parliament. But the key question then that we are asking ourselves after these moves, number one, from the citizens, and then, of course, from the measures that the government has actually indicated that it's going to be taking, what does that then mean? And then, of course, having the lens of the budget that was essentially passed by Parliament, what do we expect to see going forward in terms of the developments in the economy? And I think it's critical and for us to be able to get a better understanding in terms of where the government is coming from. A big proportion of what is normally collected in terms of revenue normally goes to debt repayments. So that a substantial chunk that is within the government. And that, of course, if I may use the term non-negotiable in the sense that it has to be repaid. Number two, of course, we do have salaries that also takes quite a bigger chunk. Like if you look at last year, government employees' salaries alone took around 992 billion. That's according to the numbers that we've been able to pick from the Kenya National Bureau of Statistics. So meaning there's a lot of pressure coming from the debt payments. And of course, the second element is on salaries towards government employees. So if you take those two components together, whatever normally remains is very limited for us to be able to undertake any development activities in the economy. Meaning that the government is normally left with a few options. Number one of which is either to scale down on development spending. Number two, there's another angle to this, which is, of course, spending towards county governments, which is the equitable share. Already we've seen the government, or rather from the pronouncement the president has made, is that we'll see a reduction even in terms of monies that normally go towards counties under the equitable share. Meaning that even at the county level, we might see a reduction in terms of the spending activities across the counties in 2024-2025. Equally, what we are seeing is that as these pronouncements are being made, we expect to see the reductions actually go towards some of the social sectors. We've already heard from the president that we may see the budget that was supposed to go towards the hiring of the junior secondary school teachers slashed in the current financial year, meaning that these proposed measures could actually hurt the overall economy in the second half of, in 2024, 2025. Given the fact that the government is normally a very big player in the overall economic activities. So if you want to think about the suppliers to government, if you want to think about the contractors towards government, so those are some of the conversations that are currently being undertaken in terms of what we are going to see as reduction across the various government programs going forward. But having said that, I think it's important for us to be able to appreciate the fact that an aggressive reduction in government spending, number one, will actually hurt the economy overall. So in as much as we support this drive that we need to reduce our spending so that we can actually be able to match the levels of collection or rather levels of revenues in the domestic market, we need to be alive to the fact that we have some non-discretionary spendings in the budget that will have to be done. That is number one, debt, of course, salaries. So we'll probably have very difficult conversations going forward, including conversations around whether then there is a need for the government to be able to look at the numbers of staff that it has, and whether then there are numbers that probably the government can actually be able to work without, meaning that you're actually laying off people, which is one of the conversations that are currently being undertaken. It's quite unfortunate that we had to come to this level, but I think going forward, the measures that are going to be taken by the government could be very painful for some areas. But I think there are some of the measures that I think we need probably to have so that we can actually be able to have some space on the budget so that we can actually be able to implement some of the programs that the government intends to do going forward. And having highlighted that in terms of what the budgeted amount was, what the finance bill was supposed to raise, I think it's important for us to be able to go deeper into the budget and see, despite the fact that we are going to see these spending cuts, are there opportunities for businesses in the current financial year? And the answer to that is a strong yes. There are still opportunities within the government space. If you look at the budget as it was read in Parliament, and if you look at the budget documents, the government has still around 5 key focus areas that it's going to focus on in 2024-2025. And one of the key areas that the government is currently focusing on, of course, is the agricultural space, which we've seen very strong growth last year and even this year across most of the value chains within the agricultural sector. So the government has a value chain approach within the agricultural sector. And some of the value chains that the government is actually focusing on in the current financial year, and of course, even in the last financial year that has just ended in June 2024, we have rice as a key focus area for the government. So for players or for our customers that are actually playing within the rice space, we expect to continue to see government focus on the rice space. Equally for tea and coffee, those remain as our key cash crops as a country. And the government has made itself very clear, has actually pronounced itself very clear that going forward, tea, coffee, and the reforms that are actually being undertaken, we expect to see production levels actually move up. And then that will mean, in a sense, the overall production levels for those two value chains, we expect to see an improvement going forward. The government is equally focused on the leather space. Textile is another segment that the government is focusing on. There are funds that have been budgeted towards some of these value chains. We've seen the government coming out clear to say that even within the sugar space, there is need for us to be able to revitalize the sugar space by way of repaying outstanding debts, so that we can actually be able to have millers that actually started operations late last year to actually continue with the activities within the sugar space. We've seen a focus on the dairy space. Actually, there is money that has been set aside for milk processing in the current financial year. Of course, fertilizer program is still within the budget. The initial budgeted amount was around 10 billion. But because of the rejection of the finance bill, we might see probably a reduction in the overall spending on fertilizer. But this fertilizer program has actually been one of the key drivers as to why we are seeing the overall growth around the agricultural sector to be very strong in the first quarter of this year, and of course even into in 2023. And our assessment is that even going forward, given that largely Kenya as a country, we are largely dependent on the agricultural sector, and we do expect to see the strong growth going forward. Of course, barring the fact that if we probably see what we saw earlier in April, May, in terms of the flooding that we saw. And of course, if probably we see drought, which we don't expect to have, then we expect to see a stronger growth in 2024. So agriculture, one of the key segment where we're seeing opportunities, given the fact that it's a focused area from the government. And even in terms of the overall allocation by the government towards that segment of around 54.6 billion in the current financial year. Though we might see a scale down of that because of the rejection of the finance bill, we do still expect to have a significant allocation of funds towards the agricultural sector. And we expect overall economic activities, of course, to be anchored around the agri space in 2024. The second focus area from the government, and where we see opportunities, especially for clients that are within those value chains or those segments, is of course the housing and settlement. Affordable housing is one of the key focus area for the government, and we do expect to see this continue even into the next financial year, that is 2025-2026. And if you look at the budgeted amount that has been set aside for this endeavor is around 92 billion. So meaning that the government is having a very heavy focus on the housing and settlement space. And we'll be able to share with you some of the documents that we've been able to get from the Treasury that we've synthesized in terms of where the money is actually going within the housing and settlement space in 2024-2025. So the message is, for our clients that are within that space, we see opportunities in that area, given that the government is still focusing on that area. Equally, for the healthcare space, we do expect to see opportunities on this segment going forward, given the fact that, of course, the government continues to focus on this. And there's a clamor that we've been having as a country that we need to have universal affordable housing for the country. And given the fact that we've seen already the Social Health Act in force, though the implementation now has been postponed because of a few challenges here and there, we do expect to see some sort of improvement in terms of the overall delivery of healthcare services in the country. And that will mean that for clients that are playing within the healthcare space, whether private or otherwise, we do still expect to see opportunities within that segment going forward. And the message is, of course, for us to be able to align ourselves with what the government is trying to do, because it's very critical in terms of the overall funding that the healthcare sector is actually going to get from the government. We know that number is around 127 billion in the current financial year. We don't expect to see a significant scale down, or rather a scale down, even after the rejection of the finance bill. We do expect to see a strong funding towards the healthcare space in 2024-2025. And of course, continuing with the key focus areas from the government, we have the digital economy. That is a focus area for the government. Of course, we have enablers to these key focus areas by the government. Of course, the MSME space itself is a key focus area by the government. If you want to talk about the Hustler Fund, if you want to talk about other allocations that normally go towards the MSME space, even in terms of issues around training and all that, I think the government still has a keen eye on the MSME space. And of course, the reason for this is that the MSME space actually employs the highest number of people in the economy. And the fact that generally our economy is largely MSME in a sense. So it's informed from the fact that it employs the highest number. It's most of our businesses are within the MSME space. So I think it basically makes greater sense that the government just focuses on the MSME space in terms of building capacity, so that we can actually be able to scale the activities within the MSME space. So that will continue to be a focus area from the government. And we do expect to see some improvement, especially now the discussion that we had very broad and robust discussions around the finance bill. And that's probably one of the reasons as to why we've seen the rejection of that bill in its entirety, speaking to the fact that some of the measures that were being proposed were, in a sense, were going to hurt some of the players within the MSME space, some of which were addressed by the Finance and Planning Committee of the National Assembly. But be that as it may, I think going forward, we'll be having very broad and elaborate discussions around the measures that will normally be forwarded by the government in terms of tax measures, so that we come up with tax measures that actually will support the businesses to even scale up in the current environment, and so that we can actually be able to take more of the youth that we're having in the economy in terms of employing them, and of course reduce the challenges that we have around the unemployment in the country. The last two areas that I'll speak about, two or three, is of course on infrastructure. So issues to do with roads, issues to do with bridges, maintenance of roads that has received quite substantial amounts in terms of funding. Education sector is very critical for this country, and that continues to receive significant funding from the government. And what we expect to see, in as much as we've seen a pronouncement that the junior secondary school teachers probably will not be able to be absorbed on permanent and pensionable terms in the current financial year, I think the conversations that are still ongoing, the indication is that we might actually see that actually being seeded, and we might actually be able to see those teachers actually being absorbed on a permanent and pensionable term basis. So opportunities within the education space, both on the private and of course on the public space, equally for the manufacturing space, given the fact that it's a focus area from the government. Though in terms of the overall growth within this sector, we've seen a bit of a slowdown in terms of the overall growth. But assuming these measures that have been put in place by the government actually gains traction, then we should be able to see a revamp of this sector going forward. So that's basically touching on the finance bill, on the budget, the challenges that we're seeing on that space, and of course now in terms of the opportunities that we're actually seeing going forward, especially across those key value chains that the government is focusing on. But as we proceed on this, I think it's critical for me to make a point that in as much as we're seeing these opportunities, this is not to say that we will not see some challenges across the road. Of course, we know that pending bills has been a very big pain for businesses in this country. And this is, of course, emanating from the fact that the government has not been able to make payments towards pending bills. Though we saw an improvement from September 2023 to March 2024 in terms of the reduction of the total stock of pending bills by around 140 billion. But the information that we've been able to get from the government, from the National Treasury, is that the audit that has been done on the pending bills, the number could actually be way higher than it was initially thought, meaning that once the report is out, either this month or next month, we'll actually be able to see the total pending bills that are owed to various businesses. And of course, a bigger chunk of this normally goes to the contractors and suppliers of government. Hopefully, going forward, the discussion that the government is having, we should be able to see a reduction of the pending bills in the market, because that normally affects the ability of businesses to be able to continue doing what they do in terms of rendering services either to the government or even to the private sector. So hopefully the discussion that is currently being undertaken, we will be able to see a clear path towards clearing of those pending bills from the government. So that touches on the finance bill, and of course it touches on the budget. Now, going deeper into how now the economy has been able to perform in the first half of the year, and I think this is very critical from where we sit, given, of course, the fact that we know that if the economy is doing well, then we should be able to see this trickling down to the business players in the economy. And it's true, looking at the comments that you are making in our opening remarks, and of course, that was being spearheaded by Peter. It's true that overall the economy has been able to grow, but the question is, which segments are showing significant growth in the current season, and where are the challenges, and what is it that we can actually be able to do as businesses so that we can actually be able to cushion ourselves against the challenges that we're seeing in the market, but more importantly, be able to tap into the opportunities that we are seeing in the operating environment. And as I was discussing the opportunities from the government, it's clear, even in terms of the data that we have from our Kenya National Bureau of Statistics, that the agricultural sector has been very strong in 2023 and even into 2024. Some of the key value chains that we've seen opportunities across the agri space is, of course, within the tea space. Coffee, we've seen opportunities. And opportunities here, we are looking at the overall earning levels within those segments. Of course, if you look at even the horticulture space, the earnings were up a bit, but we've of course had a few challenges, especially around freight costs, especially for the horticulture space. So that has, of course, had some challenges around the margins that players or other clients normally get around the horticulture space. But we've seen also positive developments in the sense that in as much as we are seeing some segments that are probably not doing as well as we would have expected them to do, especially looking at the manufacturing space, I think there has been overall an improvement in terms of the key variables. And by variables here, we're looking at the movements around the Kenya shilling, the inflation numbers, and of course the interest rates. And I'll just go deeper into this so that we can actually get a better sense in terms of how things have been. But looking at the trajectory of the Kenya shilling from February this year to the current season that we are in, July, we've been able to see a significant turnaround in terms of an appreciation of the Kenya shilling. And this has been largely been supported by the fact that the government was actually able to float a new Eurobond in February. That was very successful, and that was used to partially repay the 2 billion euro bond that was maturing in June of 2024. So what that did was to remove the uncertainty that was there in the economy, and it gave confidence to investors that actually the Kenyan market can actually be able to offset its maturing liabilities, but at the same time, be able to attract new investments into the domestic market. So we've seen the appreciation of the Kenya shilling into July of 2024, largely because of the positive dividends that we've been able to get from the refinancing, or rather the buyback of the Eurobond and the settlement of the remaining amount in June of 2024. This was also supported by the inflows, or rather the money that we've been able to receive from the IMF in dollars. I know currently the discussion around the IMF is not a very good discussion for most people in the country, because people are having the view that probably the IMF is one of the areas, or rather the parties that have actually compounded the challenges that we're seeing in the economy. But I'd like to highlight the fact that in terms of the inflows that we've been able to receive from these multilateral lenders, most of it is actually, number one, concessional, in the sense that the interest rate that we normally pay to these organizations are very low. And number two, it has actually helped us to be able to see a turnaround in the currency, from a depreciating currency to an appreciating currency. So that's positive, in as much as there are some gray areas in terms of issues that can actually be canvassed by the public. I think that was very positive, in the sense that it has helped us to see the Kenya shilling strengthen in the current season. And the strengthening of the Kenya shilling is very important for us in the sense that, number one, if you look at the dynamics of the Kenyan economy, we normally do say that we are a net importer, meaning that whatever we normally produce in the domestic economy is normally not sufficient, or rather some of the things that we normally consume are not found in the domestic market. So we have to get these from external markets. So if the Kenya shilling then appreciates or gains against the dollar or even the euro, what that means is it reduces the cost that our importers normally incur when they import either intermediate products that are normally used in the final production process domestically, or in the importation of finished goods into the domestic market. And what that has done is to reduce the prices, or rather the inflation in the domestic market significantly. If you look at the most recent numbers from our Kenya National Bureau of Statistics, in terms of inflation, of course, the number has come down significantly to 4.6% as of June. And this has largely been supported by the fact that, number one, the Kenya shilling has appreciated, meaning that we are seeing a reduction in the cost of imported goods into the domestic market. But most importantly is the fact that our agricultural sector has actually been able to do well in the current season. So those are very two key positive developments in the current season. So what then does this mean? The fact that we've seen inflation coming down significantly, and the fact that we've seen our currency has actually strengthened in 2024. A few things that we expect to see going forward is that one of the reasons as to where we had very high interest rates last year, and of course even this year, was the fact that the central bank was increasing the benchmark rates, or the central bank rate, so that they could actually be able to bring down the inflation in the country, and at the same time to be able to help the Kenya shilling gain a footing against the dollar and other hard currencies. So that has largely been attained as we speak today. So what we do expect is that we do expect, especially now in the second half of the year, we expect to see some positive developments from the central bank in terms of reducing the benchmark interest rate, which then, of course, will signal to the banks that we need to sort of reduce the lending rates that we are seeing in the market, which will be a very positive development for our customers in the market, in the sense that we do then expect to see, especially in the last quarter of this year, to see the central bank actually reduce that rate. And then, of course, that will then mean that it will translate into reduction of the interest rates overall in the domestic market, especially towards our clients. We do expect to see these results, especially beginning 2025, in terms of what the central bank will be able to do in the second half of the year. Equally, what we do expect to see because Kenya as a country does not operate in isolation. We operate in a framework of other countries where we do engage with other countries in terms of trading and, of course, in terms of the policy measure that are normally being undertaken. And one of the key issues that was there and still partially has been the issue of the interest rates, of course, in the US, whereby the rates have remained very high by historical standards. And of course, there's an element that we normally don't like to talk about, but there's an element that we normally have in terms of Kenya trying to balance between the interest rates in the domestic market and interest rates externally by our trading partners. And one of the key challenges that is normally there is if you reduce your interest rates significantly, then some of the investors that have actually been coming to the domestic market to invest will deem the other markets, in this case, the likes of the US and the Eurozone, to be very attractive. And in that case, then they'll be able to pull out their funds into those markets. But the positive thing that we are seeing currently is that we're already seeing interest rates reducing, even in the Eurozone. We've seen Canada recently reducing their benchmark interest rates. The only area that we need to see we need to see reduction is, of course, the US. And given the fact that this is an election year, we could probably see a reduction in the next probably few months. That then will signal even other markets globally that rates or interest rates are actually coming down globally, which will be very positive for us. Number one, because we will be able to still attract the dollars that we've been attracting. But most importantly, then we will be able to see the reduction in interest rates in the domestic market, which of course will also help the Kenya shilling to be able to maintain the level that it has maintained since February to July of this year. So those are some of the expectations that we have around the interest rates, especially as we go towards the end of the year. And that will mean then that our clients will benefit in terms of how rates then will be able to start coming down. So that's on the key variables on the economy. But then the key question that we are asking ourselves and that we'd like to discuss with our clients is that we've seen these developments. We've seen how the numbers have been in the first quarter of the year, where we've seen agriculture doing very well. We've seen the education sector doing very well in terms of growth. We've seen the health sector also growing very well in 2024. But are there challenges in the market? Yes, we still see a few challenges, or rather we do still see some challenges, of course, in the market. If you want to talk about the cost of inputs in the domestic market, in as much as we are seeing prices slowly starting to come down, we are still seeing those levels being higher than the levels that we witnessed in 2021 and part of 2022. So the desired level that probably we should be able to target for us as an economy is for us to be able to see the cost of key inputs into the manufacturing processes, into other processes, of course, back to the 2021 levels. Those were levels that were desired in the sense that then it reduces the overall cost, even in the domestic market, which will then spur consumption levels in the domestic market. But before I even proceed further on that, I'd like to speak on the issue of fuel prices in the country in relation to the currency, or rather the Kenya shilling appreciating in the current season. And I think one of the comments that I've seen from our clients is that we've seen favorable movements on the exchange rate. We've seen fuel prices being very supportive. Actually, if you look at the last 5 pricing cycle by EPRA, we've seen reduction in the monthly pricing of petroleum products, which is very positive. And this is largely because of the appreciation of the Kenya shilling. Remember, we import petroleum products and we normally pay in dollars. And the fact that the Kenya shilling has been able to gain against the dollar, it essentially means that our import bill, or rather the amount that we used to use in 2023 to import fuel in part of 2022, has actually come down significantly in 2024. And now what the government is doing is to actually pass that benefit into the final to the final consumer. And we've seen that to be very positive in the market. Of course, it helps the players within the transport sector in terms of them being able to help protect their margins in the current season, whether players within the petroleum, the energy distributors. So that has been very positive in the current season, and we do expect that to be maintained towards the end of the year. A very positive development in that case. But now going forward, in terms of the discussion that we've been having, in terms now of the opportunities that we are actually seeing from these developments in the economy, and especially now I want to take a different dimension and look at the population dynamics in this country, which is a very critical pillar that for any business person needs to be very cognizant of and be able to take into consideration as we formulate our strategies in the current season. We do know that most of the population, actually a bigger proportion of the population is youthful in the country. We are talking about 65% of the population being youthful. And what that presents to businesses is significant business opportunities. If you look at the median age of the Kenyan person today is around the 19 to 20 years currently, meaning that you're having people who are still going to school, whether primary or high school or even campus level, meaning that you have opportunities within the education sector. So that's number one. Based on the population dynamics, we have opportunities for investors within the education space currently. And that will continue, of course, in the next, in the future and into the medium term. Secondly, this is a population that is very strong in the sense that they are actually at their productive peak levels, meaning that for players within the healthcare space, you should be able to see opportunities in the sense that you're having a very youthful population that is at the peak of actually of its production capacity, meaning that the demand for healthcare services can only be able to even increase as we go further. Because if you are at your peak today, it essentially means that as you age, your demand for health services will actually continue to increase, in the sense that we know that as we age, our bodies normally do react to the ages, and then of course, probably your visit to hospitals and all that will continue to actually increase, meaning that we are seeing opportunities for customers in the call and for players within the health space to actually be able to tap into these opportunities within the health space, as we have this conversation around the population dynamics in the country. So we've talked about the education sector in terms of opportunities. We are talking about the health sector, but critically, and given the dynamics that we have around the population, we know that the demands for food will always be there. If you have a youthful population, people who are actually energetic and who are actually at the peak of their production, actually going towards the peak of their production capacity, it essentially means that the demand for foodstuffs will only remain as strong in the current season as the medium term in the current season. So meaning that for players that are actually within the agri-food value chain, we should actually be able to see those opportunities actually increase going forward. So for players that are actually into whether it's tea, whether it's coffee, maize farming, we should be able to see dairy farming, even sugar farming. We should be able to see those opportunities because the demand will be there in the domestic market. And of course, this will be supported by even demand in the regional markets. If you look at the numbers that we have in the first half of the year, we've actually seen strong demand from our partner states, especially the Democratic Republic of Congo, in the first half of the year, in terms of demand of Kenyan commodities, whether food or even other finished products like players who are within the metal space. We've seen a very strong demand within the DRC market. Equally for Uganda, in terms of demand for Kenyan products, the demand has always been very strong from Uganda. Equally, Tanzania, not so much, but still we have substantial numbers in terms of what we normally export to that market. So in terms of demand, even from the regional market, we do see opportunities for our MSME players to actually be able to sort of spread your tentacles and be able to actually tap into these opportunities from the region. So in terms of the overall outlook in the second half of the year, our expectation is that we expect to see the economy more or less the same as in the first half of the year. And this is, of course, informed by the fact that there are a bit of reorganizations around the government, reorganization in this sense in terms of the spending. We should be able to get a clear sense from the supplementary budget that is supposed to be done soon in terms of the key focus areas going forward for the government. We don't expect to see a significant shift in terms of the key focus area. And that's where we are saying, even in the second half of the year, we do expect to see more or less the same outturns, or rather the same level of economic activities as in the first half of the year. But as we close on this discussion, is to speak about what we see as an opportunity for businesses to be able to navigate the current operating environment. A bit of challenges, of course, in the operating environment. But as I've said in our discussion, that we expect to see things to start to improve, especially around interest rates. The currency has already improved. We do expect to see, of course, inflation remain within the targeted levels, which will mean then that in terms of the overall cost of inputs, even in the domestic market, we don't expect to see a significant increase compared to last year. And I think it's critical at this point for us to be able to sort of say what the 4.6% inflation number essentially means for businesses and consumers in the economy. I've seen some confusion across some quarters that people say the inflation has come down to 4.6%. So we should be able to see the cost of those inputs come down significantly. That's not the case. How we interpret the inflation number is that if you are comparing 2024 June, which is of course the case, and June 2023, what we are saying is the prices in the domestic market have been able to increase by 4.6% compared to the levels in 2023. So meaning that if a commodity that was being used to produce a finished product in the market was going for 10,000 last year, it has increased by 4.6% in 2024. Meaning still the prices have gone high, but not as high as what we saw in 2022, where prices were increasing by as high as 9%. So the benefit of this is that we are seeing prices increasing, but they are not increasing at a faster rate compared to what we saw in part of 2022 and 2023. And this is very positive for businesses in the sense that you are actually able to plan your affairs properly, in the sense that you know prices will increase, but just by a smaller margin, not by a higher number compared to what was happening in 2022 and 2023. But the overall assessment is that still prices are higher than where they were last year. So what can businesses be able to do in the current environment so that we can actually be able to navigate these challenges? One of the key things that we've seen from the government side is, of course, the key focus on digitization. And I'd like to speak on this towards businesses in the current environment. So if businesses can actually be able to tap into technologies, then what we expect to see on that is to see improved efficiency in terms of what those businesses then will be able to do. And I'm quite happy that one of the comments that I've seen is that one of our clients was actually able to procure a new software for bookkeeping, meaning that in as much as we are focusing on the business, we are equally aware that there are some technologies or other things that we need to improve at the business level, so that then we can actually be able to increase our efficiency, number one. But one of the key benefits of digitization is actually on reduction of costs. So if we can actually be able to reduce our costs in the current environment, then that will essentially mean that we can actually be able to have, number one, buffers that will actually be able to help us scale our businesses. but most importantly, we'll actually be able to reduce the challenges that we've been having around the cash flows, especially for the MSME players. So very critical for us to be able to adopt this technology so that then we can improve our efficiency levels. Number two, reduce costs, and most importantly, for us to be able to scale our businesses and tap into new opportunities in the operating market, in the operating environment. So these are some of the messages that we had prepared for this session. I think what we'll do now is to be able to welcome comments, questions, so that then we can actually be able to continue with our conversation. Thank you so much. At this point, I'd like to hand over to Peter to proceed with the conversation. Thank you.
Wow. And I can see a number of customers have already started to clap for you. Julius, let's keep the claps going up. I think that was quite informative, a very interrupted session on what is happening in our economy, what is the impact of the finance bill and the rejection, what are some of the opportunities that we anticipate in the next quarter. I think, thank you, Julius. And I think if you're joining us late, the conversation today is on what is happening in our economy and what is it for us to look at when it comes to the opportunities. What do we anticipate to do and to get when it comes to doing business? What are some of the opportunities? And I think Julius, the bank economist, has really shared quite a lot of insights. And I think one of the things, Julius, you've highlighted is that agriculture will continue to do very well, and it is also very well supported by the government and the budget that has been allocated to it. And you recommended that if you are in that, that sector and the value chains that are related to it, we'll expect to see growth. We expect to see growth in all those areas. If you are a supplier, if you are playing around that value chain in agri and agri value chains, we expect to get a lot of business, and we continue to anticipate better growth. I think the other areas you highlighted and the support that has also been given by the government is on the housing. If you are a supplier, if you are playing around housing, I think affordable housing have also been allocated a lot of funds, healthcare, and the new act that is also helping us on the Social Health Act. I talked about the digital economy and the need for us again to digitize and to also to check on where we need to digitize when it comes even to our businesses. You talked about infrastructure, education, and also the MSME space that again the government is really supporting. And we also expect if you're playing around those value chains, try and check where you can get an opportunity to do business. But I like the fact that you also closed the session saying that what do we need to do as business? That one, you have highlighted the need for us to digitize again. What are some of the technology and the platforms that we want to leverage on when it comes to doing business, so that again we are more efficient? We are looking at operational efficiency in our business. Then how do we tap into this? And one of the things again you've also highlighted is the huge population that is for young people. I think we have seen a lot of opportunities when it comes to the young population that we have as a country, and we expect to see the health sector and the education sector and also the consumption when it comes to food. We anticipate a lot of growth again on that particular area. And I think as a business people is to ask ourselves, where are we playing when it comes to these sectors? So I think you have also highlighted the need for us as business people to reduce on the cost of our production. Are you checking on your cost as a business customer to say that you have minimal cost? You are reducing on the cost of doing business. Again, you're seeing the country and the government also reducing the cost. Then what are you also doing as an individual, as an entrepreneur, to have a minimal working budget? Again, I think you have also highlighted the need for us to look for new opportunities to scale our businesses. I think very, very critical for us as try to see the opportunities that are there. I think, team, let's keep on sharing questions that we can also have in this particular session. I see some comments from, I think someone also, and I think this is also a good thing that you also highlighted, Julius, that we also anticipate reduced interest rates in the banks and other financial institutions going forward, possibly early next year. I think that is a very good news, and I saw participants here welcome that particular thought. I think there's a question here that is coming from James. James had asked, what is the thinking of the government economists in the current environment where 5% of the population has more than has more than they need, and there are people, a big population of possibly 90% who are struggling. I think possibly that is an area around the government and how they need to focus on that support. There's a question here, any support on opportunities for the young people with special needs, that is persons with disability. Trying to check what are some of the questions. I see participants highlighting that was quite an informative session, and you have requested that we share the presentation. Yes, let's keep on asking questions. I think there's a question here. There's a question here from Marcin Jari. She's saying it's a very helpful presentation. Do you also anticipate a situation where the government focuses on domestic borrowing, which jeopardize the small customers a chance of borrowing at a reasonable rate? Maybe you'll also highlight something around that question. Maybe Julius, you can check from your end. I don't seem to have many questions regarding the presentation, but I think you have highlighted quite a lot of insights and opportunities that we can anticipate going forward in the 2024 and 2025. Anything that you'd want to comment on those few questions?
Thank you, Peter, and thank you, our esteemed clients, for the comments. I'll comment on. I've seen two questions from the chat, and I'll start on the one from Mercy on domestic borrowing and how that then could impact the level of interest rates in the domestic market. And one of the key issues that the government has been grappling with has been the high interest rates in the domestic market. And if you look at the treasury bills and the treasury bonds, the interest rates have been around, in the last 1.5 months, have been around the 16% to 17% mark. So that's very high in the sense that what the treasury bills normally signal to the intermediaries, that is the banking industry, is that that the level, that probably where the base will be for banks, and then probably banks will have a markup on that for in terms of their advancement of credit to the market. But now the question is, with the rejection of the Finance Bill 2024, and with the pronouncement from the government that instead of cutting the spending by 346 billion, which was supposed to be raised from the Finance Bill, the government has instead said it's going to cut 177 billion and raise the difference, which is 169 billion, by way of borrowing. So the question is, how does that then impact the overall borrowing? I mean, the overall interest rates in the domestic market? And I hear you, Mercy, from where you're coming from, because the expectation is that if the government decides to raise the 169 billion from the domestic market, then that will essentially mean that we will probably have some pressure in terms of the government actually competing for funds in the domestic market, number one. but equally because of the funding gap would have increased from the government. That is the deficit, the difference between what the government will be collecting and what is spending will actually widen. So in that case, what then will happen is that the government will become very active in the markets, meaning that interest rates will relatively remain more or less at the same level. And that will mean that interest rates will take probably a longer time frame before they can actually start falling, which is a genuine concern in the sense that that will actually impact the levels of credit advanced to private sector players in the current season. But what is important for us to acknowledge and probably talk about at this particular point in time is that, number one, the government has not made it very clear whether the 169 billion will be borrowed from the domestic market. Number two is that the government has two programs that are actually, yes, it has two programs. Number one, from the IMF in terms of funding. And number two, we have some funding lines from the World Bank that was supposed to come in. So actually, the deficit that was there initially was actually, most of it was supposed to be funded from external sources. But now, with the 169 billion that is going to be raised, it's not very clear whether that is going to be raised from the domestic markets or from the external markets. But more, it's more likely that the 169 billion is going to be raised in the domestic market. Then the next question is, do we expect to see interest rates in that case remain high in 2024, or do we expect to see interest rates start to come down significantly in the second half of the year? And the answer to this is, of course, two-pronged. Number one, it will depend on how the government is actually going to implement the spending cuts that it has said it is going to implement. So assuming the government will undertake the spending cuts of 177 billion, because if you look at the numbers that were the amount of money that was borrowed in the domestic market in the last financial year ending June 2024, as of May 2024, the number was in excess of 700 billion already. But now you are seeing the total figure that we are supposed to borrow from the domestic market was around 300 billion. And now plus the 169 billion thereabout, it essentially means the total borrowing in the domestic market will not be as high as it was in the last financial year. So at least that gives us comfort in the sense that we could actually see interest rates still start to come down. And this is also supported by the fact that if you look at the last 1.5 months, or actually 2 months, interest rates in the domestic market have not moved significantly if you're tracking the treasury bills and the treasury bonds, essentially indicating that the rates have actually peaked in the domestic market. And what we are likely going to have in the second half of the year is actually those interest rates now starting to fall off in the domestic market. Will rates be high in 2024 than 2023? Absolutely, yes. Interest rates will be high in the current year compared to last year. And that is largely being informed by the fact that if you look at the first half of the year, 2024, interest rates were very high. They actually increased quite aggressively. But now we are seeing those rates actually remaining at a certain level beyond which we don't expect to see them going. So we don't expect to see interest rates on the treasury bills and bonds. I mean, the treasury bills go beyond 17%. We don't expect to see interest rates on treasury bonds actually go beyond 17.5%. So that's a very comforting position to be in. And we do expect to see now, especially from the signaling from the central bank, to see those rates now starting to fall off in the second half of the year. So the overall assessment that we have is we will see rates start to come down in the second half of the year. And this is informed by the fact that the levels of borrowing will not be as significant as what we saw in the last financial year, unless from the supplementary budget we see changes to that effect, of which we will communicate. We do still expect to see interest rates overall start to fall off, especially in the fourth quarter of this year from the government side, and then that will transmit into the banking industry, and then we should be able to see that benefit being passed over to clients in 2025. So that's one on issues on domestic borrowing. The other question was on opportunities for young people from the budget. And the answer is yes, absolutely. We do still expect to see opportunities, especially after what we saw in June in terms of the discussions that were being undertaken. I think youth are saying we need to be at the center of how things are being discussed, how things are being done. And we do expect to see opportunities remain even in the current financial year. So opportunities will be there for the youth across various segments, whether in terms of donor-funded projects, or in terms of money that has been set aside by the government towards youth activities. We do expect to see opportunities for the youth in the current financial year. Back to you, Peter.
Right, great. Thank you. Thank you so very much, Julius. I think a very interesting discussion here, and I like the fact that you are ending on a high with hope that we also anticipate lower interest rate going forward, and we looking forward for this so that we can continue supporting our business customers and entrepreneurs, to have some good and favorable interest rate. I think very good discussion, and I'm looking at time. It appears we needed to have a longer session on this and possibly have another session. But I think I like the fact that we still have a lot of hope when it comes to the economic outlook of this year and going forward. And thank you so much, Julius. I think you have highlighted again areas around agriculture, the housing, the healthcare, the digital economy, the infrastructure, education, the MSME space. You've talked about the inflation and how we also anticipate to see the prices go down, and the need for us again to scale our businesses to look for new opportunities and also reduce on cost. As we come close to the end, I know, Julius, we needed to have more time for this. Possibly we can agree that we'll have another session, and possibly we'll also be coming in to say, then how are we supporting our business customers when it comes to the way the economy is moving? What are some of the solutions again that is related to this, and how can they also anticipate to grow, to look for these opportunities with the support from the bank? And so I think we may have another conversation, maybe even discussing how then we also support you when it comes to the currency, Forex, getting Forex rates that are favorable to you. I think is a discussion that we can continue to have, and many things. So team, I think because of time, we want to appreciate Julius. And Julius, you can make your closing remarks as just the closing remarks as we end the session, and looking forward to have another session. Yes, I see Joyce Gatua is saying, yes, we need another session. So Julius, you want to make your closing remarks as we look forward for the next session? Julius?
Thank you, Peter, and thank you to our esteemed clients who've been able to log in and listening to this conversation. We appreciate you. And I think, yes, we need another session to be able to go through the matters in the economy. And I think the commitment is that we are available. Once the meeting is scheduled for us to be able to engage our clients, we will be available so that we can actually be able to take you through the things that we are seeing in the market, and then how best as our clients we can actually be able to help you and actually give you the opportunities that are there in the market, and probably sort of guide you in terms of how then you can actually be able to strategize even going forward. So I think overall, from my end, is just to appreciate everyone who has been able to join us, and those who've been able to make comments, questions. I think, yes, we need another session for us to be able to go through more of the developments that we are seeing in the market. Yes, thank you. And back to you, Peter.
Thank you, Julius, and even for that commitment. Team, let's appreciate Julius. That was quite informative, Julius. I think we will have another session. I'm happy that you committed, that we can have another session and now combine with a solution that, we'll be saying this is what We will also be doing as a bank to support them, the customers and the entrepreneurs in these economic opportunities that we have also been able to highlight. And so just in case you missed some of the sessions, we have a link. We have the MSME online portal that you can also get the recordings on the Knowledge Hub. Please just take that link and I'm sure you'll be able to get more information. Let's keep engaging our branches, have that conversation with our relationship managers, our branch managers. Let's leverage on our digital solutions again to also collect and also to make payments and even to save. And I'm sure we'll continue to support you. So we have our contacts down there, and many thanks for joining the session. Hoping to meet you in the next session, same time, Thursday. So I think we can wind the session with a word of prayer. Allow me to pray, so in the interest of time, so that we can close and we have a good session. So our dear Heavenly Father, this afternoon, we want to thank you for the session that we have had. Thank you for Julius, our speaker. He's given us very good insights and shared some of the opportunities for our business people. And thank you for our business people and the participants who joined this session. Thank you because, Lord, we have been able to learn and we have picked a lot of insights. And thank you for the partnership that we have had. We pray for them and for their businesses. May you continue to grow them. As we prepare to meet next week, we pray that you'll be together with us. In Jesus' name, we do pray and give thanks. Amen. Amen. We can type amen and amen. And thank you. Thank you, team, again for joining. It was a pleasure having you here. Looking forward to meet you next week, same time, with a good topic. Asanteni sana.